Imagine waking up in a world where the US dollar is no longer king. No more dollar-backed oil deals. No more greenback as the world's safe haven. No more dollar-dominated trade. This is de-dollarisation, and it's already happening. But what does it mean for your savings, your job, and the global economy? Let's break it down. In a de-dollarized world, some nations rise. China, pushing the yuan in global trade. Oil deals with Saudi Arabia, settled in RMB. Russia, trading oil and gas in rubles and yuan. Less dollar, less US leverage. India, cutting forex costs by settling trade in rupees, especially with Africa and Southeast Asia. Iran and other sanctioned countries, bypassing US dollar sanctions. BRICS nations, building a new settlement system outside the dollar, possibly even blockchain-based. But not everyone wins. Japan holds over $1 trillion in US debt. South Korea, the EU, and Saudi Arabia rely heavily on dollar trade. Singapore and Hong Kong, as major dollar clearing hubs, would feel financial shockwaves. For US allies, a de-dollarized world means currency volatility, shrinking reserves, and recalibrated influence. More than 60 countries peg their currencies to the US dollar. If global demand for the dollar drops significantly over time, these pegs could come under pressure. Without enough reserves to maintain the peg, some currencies may be forced to float, triggering instability and inflation. Take Hong Kong, for example. Its dollar peg could face existential strain, especially if capital flows shift or geopolitics intensify. What happens to the world's financial powerhouses? London could lose its FX and derivatives edge. Singapore would need to pivot quickly to a multi-currency model. Hong Kong, caught between US restrictions and China's rising monetary influence. Meanwhile, new players rise: Dubai, Mumbai, powered by regional currencies, digital assets, and crypto clearing systems. Here's the trillion-dollar question. If the world turns away from the dollar, who buys US debt? China, already pulling back. Japan, reducing its holdings. Saudi Arabia, exploring other options. That leaves the Federal Reserve, possibly buying more debt to fill the gap. And here's where the alarm bells ring. Inflation. Could the US become the next Venezuela? Let's be clear, this is a hypothetical illustration, not a prediction. Venezuela's collapse came from uncontrolled money printing, loss of oil revenues, collapse of central bank trust, and total economic mismanagement. The US is not Venezuela. It has a diverse economy, strong institutions, and deep global trust. But if confidence erodes, debt monetization accelerates, and political dysfunction deepens, then severe inflation is not impossible. Again, it wouldn't happen overnight. It would take years of sustained mismanagement and lost trust in the dollar. Markets hate uncertainty, and de-dollarization, that's a global shockwave. Expect a flight from US equities, rising volatility in emerging markets, and a boom in gold, crypto, and commodities. But not all sectors will suffer equally. Finance, huge loser. Less dollar clearing, less capital flow. Energy, the end of petrodollar pricing hurts US oil exports. Tech, currency risk, tighter venture capital. Retail, import prices skyrocket. Say goodbye to cheap electronics. Tourism, paradoxically, could see a boom as a weaker dollar draws in global travelers. Still, there's a silver lining. US manufacturing gets a boost. Tokenized finance grows. Crypto innovation could anchor the next chapter of American finance. This isn't just a story about the dollar. It's a reshaping of global power, new alliances, new financial centers, new rules. In a de-dollarized world, currency becomes leverage, and the nations that control the next reserve asset, whether it's the yuan, rupee, gold, or Bitcoin, will shape the rules of tomorrow's economy. So, will the dollar fall? Maybe not today, maybe not tomorrow, but the cracks are real, and if the US doesn't adapt, someone else will lead.